Okay, good afternoon, everybody. Good afternoon. Welcome to Paul's Monday Market Update number 227 for Monday, 15th of June, 2026. I hope you're well. Hope you've had a good weekend. Hope you're ready for what is going to be an interesting week ahead for us. Okay, lots going on, lots been going on, of course, and lots to come this week. So it is going to be an interesting week for us. If you are joining us for the first time, the Monday Market Update is just that. It is me flying through as much as I can share with you in the next 30 minutes, looking at strength and weakness within FX, indices, and commodities markets, looking at some charts of interest you might want to add to your watch list, and then a look at the live markets. It's not a signal service, it's not trade recommendations. It's me sharing with you what I'm looking at, which might be of relevance or help to you in your own trading and investing decisions. And as always, okay, you're always very welcome here, but just remember, you're always responsible for your own trading and investing decisions. And if you want a little bit more help and support, you can also join the VTP Trader Accountability Group, which is all about helping you build discipline, accountability, and consistency in your trading, regardless of whether you've been trading for 2 months or 2 decades, or regardless of whether you're a scalper, an intraday, a position, a swing, etc. Once again, there's a bit.ly code there you can use, or the QR code. I'll take you to details. Next one, AZO, AutoZone. All right. So for those of us in the UK, you might look at them as a bit more of a specialized version of Halfords. All right. So they are kind of the leading automotive replacement parts retailer for the US. They're consumer discretionary. So they have done well. Look at this, and I've spoken with these guys in the past. A lot of this is, I have to sort of thank my friends, okay, because most of my close friends are complete and utter petrol heads and will think nothing of spending foolish sums of money on updating their cars, all right, and tinkering with them. Okay, maybe that's just a middle-aged man thing, all right. Rather, that's the new version of a midlife crisis. Okay, is to basically buy a car and then pour all your money into it. Okay, if you're too old and knackered to get on a bicycle, you're spending money on your cars. But anyway, I noticed this phenomenon amongst my friends, and decided to utilize it for my own benefit, and so bought AutoZone shares must be about 3-4 years ago, and they had done well. They had done well, and not only that, they had also done well because as interest rates rose, okay, well, what we saw was that invariably that had a knock-on impact to new car purchases and lots of people buying second-hand cars. All right, so excuse me. So as AutoZone, they benefited from kind of aging vehicle fleets, increased maintenance spending. All right, so that was generating great cash. All right, and that supported some share buyback programs by the company itself. And it remains kind of what would you call it, like a relatively resilient business model compared with many other discretionary retailers. But you can see that kind of overall economic uncertainty has had its impact, all right? And you're having, as I say all the time, once price starts pulling away from those moving averages, I always start to get a bit nervous. It's going parabolic. And actually what we can see is that, really over the last 9 months or so, having been in that fantastic trend, okay, it has basically come off those highs at, $4,000 and worked its way back. And now we find ourselves around about $3,000 and the weekly 200 period moving average, which, the last time we visited here was during lockdown, all right, in March 2020, all right. It's like 6 years, over 6 years since we've been here, okay. And so, as you can see, it has been a fantastic run, and thank the Lord for those interest rate rises that basically, AutoZone did well out of. But now look at that, we've pulled back to here, first time in 6 years, and the question becomes, all right, is this a monger? Is this a buying opportunity here? Okay, certainly the price action there is kind of has been pretty bearish, isn't it? It's beneath the 20, beneath the 50. It's been working its way down. I'm going to see is there enough love here to actually to bounce and bounce strongly, or do we get a dead cat bounce before we drift our way lower? So that's why it's on my list to watch over the next few weeks.